Now, GXO Logistics will hold its first virtual investor day this week as the company gears up for a spin-off from supply chain group XPO in the third quarter. GXO says it has targeted e-commerce, automation, and a COVID-driven uptick in demand for outsourcing as areas to help boost the business. I'm very happy to say that Mark Manduca, the CIO of GXO Logistics, joins us. Mark, great to have you with us, and also congratulations on the new role. That we've been speaking to you for many years now, but this is the first time we speak to you in the context of CIO of GXO Logistics. So great to have you with us. Your company has its first investor day coming up tomorrow. I've got to think that with all the boom in e-commerce we've seen over the last couple of years and accelerated by the pandemic, it must be a very opportune time to be involved in the logistics space. What would you say are the main themes driving your business right now?
Thank you so much, Jumana, for the kind intro. We're really proud to be showcasing this asset to investors at our Investor Day. It's the clearest sign yet that our spin-off from XPO will be taking place within the third quarter of this year. We're a scale player. We have 900 warehouses, 100,000 teammates, and we're a global leader in this space. As you mentioned, there are three key secular drivers that are pushing our business forward and producing extremely strong growth, and those are automation, e-commerce, and outsourcing. I would say the key point is this, and this is what's driving our business forward. The industry has really changed in recent years. We've moved away from the Dickensian warehouses of old, where price dominated the discussion, and instead today into a discussion where customers want scale, multinational, group balance sheets that are extremely strong, and technological advancement. And that's what we offer. We offer a scale company that's global with a good balance sheet and with technological advancement, and that's why customers come to us.
It's interesting the number of times you mentioned scale there just in your opening remarks, and I'm curious to hear what role technology plays in that, specifically as a focus of yours is to automate a lot of the functions, be it by the introduction of robots or wearables. How does that impact how quickly you can grow, and what does it do to your overall margins if you're investing so much in automation?
You're totally right. It's definitely margin enhancing, and I think we have a first mover advantage as the leading tech innovator in logistics, and it includes everything from robots, goods to person systems, wearable technology. We have some phenomenal warehouses of the future that we're going to be showing investors over the coming months. In essence, on the software side, we're very proud to have developed a proprietary software tool in the form of our smart software, and this drives significant labor productivity, upwards of around 5 to 7% savings for our customers. We're experts at also integrating robotic solutions on a customized basis into our warehouses, and to give you a number, we shipped 5 times more units using advanced warehouse robotic automation in 2020 versus 2019. I want to make it clear, though, that this is a future I see where we don't necessarily see the future as being future of people versus robots. It's quite the opposite. We see the future of people and robots working together and driving efficiencies for our customers.
Very clear. Mark, one of the other major themes that we've been talking about the last couple of months are these supply chain disruptions, and many companies out there have had to reevaluate the way they think about their supply chains, perhaps move to insource the way they obtain raw materials and secure parts of their intermediate goods when it comes to that supply chain structure. How does that affect a company like yours?
I think in so many ways we're the solution. The world is obviously jammed right now from arm to arm. And if you ask yourself, how did we get here? I mean, there are many problems in the global supply chain right now. The most prevalent issue I would point towards is the shortage of containers. And this has partly been driven by imports rising and exports falling. And that's driven, of course, by buying patterns throughout the pandemic having changed. The question I would ask you is, when will that reverse? And logically, it will reverse in 2 separate ways. One is when passengers start flying again. You'll know, of course, that half of the world's available cargo capacity flies in the belly of passenger planes. So when will we start to see a reversion in flying patterns? And then on top of that, from a buying pattern standpoint, when will consumers return to pre-pandemic buying patterns? In other words, we're currently buying goods online versus, say, enjoying experiences. When those two reverse, that's when we'll start to see some alleviation in the overall supply chain. I think it's good for a business like ours in so many ways. We don't obviously want to proliferate off doom and gloom, but it does cause customers to want to think about their supply chain offering, and that causes outsourcing, as I mentioned earlier. Early days in that outsourcing theme.
Very clear. Mark, we're going to leave it there. Thanks again for joining us today on Street Signs, and good luck in the new role. Mark Manduca, the CIO of GXO Logistics.